Hello, Jim here. I've been on a journey to learn the right way to trade options to make some extra income on a monthly basis. But way before that, I was an income investor. I've been an investor probably going back to the early 80s. So I've been through recessions, I've been through corrections, I've seen it all. I do believe we're at a crossroads. I believe the greed factor is kind of out of control. I like to use the comment that Warren Buffett likes to say is when others are fearful, you need to be greedy. And when others are greedy, you need to be fearful. And I think we're at that point. Today, I want to talk about a few things you can do to protect your accounts, to protect your trades, to be sure you're ready if we do actually kind of have a turnaround in the markets. If we go from a bull market to a bear market and get into a true correction. What we saw earlier in the month was not really, it was a minor correction. I'm talking 20, 30, maybe 40% correction. So that's what I want to talk about. I think it's going to be well worth your while. At the end of the video, I'm going to talk about a few securities that I like currently that I'm looking at trading in. So stay tuned till the very end. I think it's going to be well worth your while. Okay, let's jump right in. I do want to give a little perspective on why I do think we're at a crossroads. I believe that the unemployment numbers are much higher than what the government's been reporting. They did readjust them, I believe, last week. They increased the number of unemployed by about 800,000. I think it may actually be another 900,000 higher than that. I believe we've been in a recession probably going on a year and a half, and the Fed is taken too much time to lower the rates. I think they should have lowered the rates before now. Now, do I think they're going to do a half-point rate cut coming up on, I believe, September 18th? I still think they're going to do a quarter. Now, if more unemployment news comes out, like the unemployment claims go up, then they probably will do a half a point. Now, they have said they're going to do a full point by the end of the year, so I would not be surprised to see a half point. And that's why I kind of look at it as a crossroads. I see some stocks out there and even some ETFs that are really, really pricey. People are paying crazy PEs for certain stocks. I'll give one example is Palantir. I think it has over a 90 PE, which is a bit crazy when you compare its numbers, its year-over-year growth, and you compare it to even a company like Google, and Google has around a 20 PE. I just don't see the sense in paying so much money for a stock that's so small that potentially can't do as well as a giant company like Google. So that's kind of my 2 cents. I don't think what the government is telling us about the economy is accurate. I think they're under-reporting inflation and they're under-reporting what unemployment is. And I believe also that the GDP is probably lower than what they've been, showing us or what the reports have shown. Again, it's my 2 cents. I could be completely wrong. We could go up to, even crazier highs than we have recently. We had the correction earlier this month, and we just blew. I believe we went down around 8, 9, maybe 10%, but we're much higher than, we've recovered and gone up quite a bit. So I don't think it's sustainable, and I do believe that the whole reason for this video is you need to take steps. You need to be prepared so you don't get your accounts into trouble. And one of the key points with trading options, and I think it's a negative, when you trade options, you're constantly glued to the market. You're looking at what's happening, hopefully not on a daily basis with every position, but a lot of positions, especially if they're in the money, you're kind of keeping an eye out for it. Now, if you're just an income investor, you probably, as an income investor, would hardly even be looking at the market. You wouldn't be noticing what's going on with that stock as much as you are as being an options trader. And so I encourage people to be patient. I like to use what I call my 10% rule. So unless the stock is really deep in the money, you don't need to be so fearful that it's going to be assigned away from you or to you. So away from you if you're selling calls and assigned to you if you're selling puts. And I follow that myself. I've had a lot of positions that have gone in and out of the money Some I've been able to close for cheap, others have expired. And if I wasn't patient, I would have taken losses on most of those trades. So when we do hit that correction, when the market dives and the value of the stock goes down so much, be patient, don't panic. Also, review why you originally decided to sell a put on that security, or why you decided to buy the security if you're selling covered calls. Understand why you got in, because the best choice might not be to get out. It may be to allow assignment if you've sold a put, because you'll be picking up a great name at a great price. And then also manage and reassess your positions on a timely basis. So keep track of your stocks and your securities. Have a firm understanding on how they're doing. Know when earnings are. When they do have earnings, look at how they've done, what they've provided in guidance for the rest of the year. Also avoid earnings as much as you can with trading options. Well, what does that mean? Try to avoid having expirations like right after earnings as much as you can. A lot of times the earnings could have such an impact that you may have a position that's fairly quite a bit out of the money, but then earnings, if it just, and especially in this market, if they slightly miss earnings, they can dive majorly. We've seen that recently. Like, I think Dollar General today is down some crazy amount, like 30 or 40%. And I think MicroStrategy was that way. So it becomes really important to avoid earnings. So if you have earnings coming up for a particular company, and you can get out of the position for maybe a 50% profit, well, it's probably worth your while. Again, something to look at. And then, once you kind of reassess about the company, in my mind, it takes off a lot of the fear. It keeps you from panicking, because again, the trade may be going against you, but is it really? If you really want to own those shares and you feel like that's a good price, and you can't really time the bottom of the market. So if you're getting that security kind of in between the high and the low, like the middle of the 52-week, where the stock price has been, then you're doing pretty well. And if you can get it towards closer to the 52-week low, and again, you've reassessed it, nothing's changed, and you're picking up a stock or an ETF at a really good price that should do well long term, because again, it's not a straight shot. A lot of especially stocks will go up and down quite a bit over the years, but trend up, especially if they're a good company. And I always like to reiterate what I like to look at that determines if it's a good company. I like return on equity, hopefully above 20. Return on assets, I like it to be in the teens. I like the company to have low debt, hopefully less than a 50% debt to equity. I also like to see some growth in the earnings, year over year earnings. I also like to see growth in general going pretty well. So I look at those key things to kind of keep an idea of how well is that company, doing. And then, like I said, it's one of the big mistakes I've made, and I've recently pretty much changed the way I trade, is not keeping in mind when earnings are. I used to do it more so with ex-dividend dates, which is more important for covered calls. You need to also keep track of ex-dividend dates and be sure, again, that your expiration isn't near an ex-dividend date. You want it before the ex-dividend date. Because during that ex-dividend date, the value of the security will change. The value of the stock will typically dip a bit, or somebody wants to own that security in order to get the dividend. So they might jump at the opportunity to own your shares so they can pick up that dividend. And then with earnings, kind of keeping track of them, planning around them. In some ways, it might force you, if you're more of a long-term investor, you may do quarterly trades, again, avoiding the earnings. Or what I've found is my expirations, my DTEs, I'm holding onto the securities for less. I'm also trying to close them. especially before earnings. If I see earnings coming up, if I have any worries that earnings won't be good, I'm going to do anything and everything I can get out of that position, which would include I might potentially roll it if I need to, if I can at least better the position. But a lot of times, if it's profitable and you don't want to potentially own the security at that strike, then it's best to close it and then trade it again, after earnings. Because a lot of times after earnings is a really good time to trade on a position, especially if they've dropped. Like I just did a trade today in NetApp, and it's been on my watch list for a long time, and it dropped significantly because of earnings, and they actually beat earnings and they beat guidance, but I guess not by enough. They were also impacted by NVIDIA's earnings, but just like them, NVIDIA also beat earnings. So it was a really good opportunity. I believe they were down almost 10%. So I sold a put on them another 10% lower and potentially could pick them up at a great price, or a price I would be happy with. So it's really important not to ignore those earnings. You really almost need to plan around them. And I do share that in my planning worksheet. So when I talk about a few of the good stocks that I want to talk about, I'll go over my planning worksheet. I have a favorite section, and we'll just go over that quickly. But I also have where I have all my guidelines, and that's now one of the key guidelines is keeping earnings in mind, and I'll share that with you at the end of the video. And then managing risk, it goes along the lines of, keeping track of earnings. You also need to, I like to pick certain deltas. I typically use a 15 delta with my puts and like a 20 delta with my calls. I also pick certain expirations that I like because, the farther you go out, the lower the strike you can pick for a put. And the inverse is true with a call. If you go farther out, you can potentially, pick a much higher strike price for the call. So I use all those things. I might also start using stop losses. I typically manage my trades, but I may start doing some stop losses to, use that as another way to be sure I get out, because at times I get really busy. I'm still working, and I might forget to actually close a position when I have a great opportunity to do it. Now, before I jump into that planning worksheet and share with you a couple of stocks that I think are good price right now, I just want to talk about my memberships. They've been growing quite a bit. In the description, there'll be links so you can learn more. I have 3 levels. I have what's called the Investor Club level. It does provide a week free. You do get access to my trades. You do get access to all my collections. Then the next level is what I call my Trader Club, and that gets you all the same access as the Investor Club, but you also get a planning meeting that we have. It's called my Traders Club meeting, and it's typically every other week. We don't have one this Sunday because of Labor Day. It'll be the following Sunday, but it allows a bunch of people to get together. You can ask me questions. Sometimes I'll have a member kind of share his screen and talk about his types of trades. And then the highest level is my coaching club, and it includes everything from the other 2, but you also get 2 coaching sessions every month. So take a look. It may be worth your while. Like I said, the memberships are getting really busy. I'm a little different than a lot of the other YouTubers, so I'm fine with people sharing good videos from other YouTubers. I actually have pretty active community, even the 0DTE and the futures, a lot of very advanced traders who are doing things I'm not even doing yet. So I encourage you to take a look. It may be worth your while. With that being said, let's jump into the next part of the video. When I am currently using for my August trades, you can see I've only got one more day of trading. That's assuming I don't do any more trades today, but I'm currently at 84.73, so I've again beaten my monthly budget. The net, though, would be a bit lower. It looks like it would be closer to about 7,000. So even with the assignment loss for Airbnb and UPS, which I'm not sure this loss would still be this high. I haven't adjusted the stock prices, so I don't know if Airbnb or UPS has gone up. but I definitely have met my goal. And if I have a good day tomorrow, I'll probably even surpass it. So I wanted to share this favorite section. So this is what I provide to my membership. I also have watch lists that I will also export and provide to my community. But I wanted to talk about a few of the companies. So the ones that are yellow are companies I really like, or ETFs, but they're very pricey. RSP is an ETF I like, but I believe at this time it's pretty pricey. I kind of look at Zoom and PayPal as not too pricey, but not, they're not cheap either. They're not a bargain. I do believe Square and Cisco are at a good price. Profitability for both these companies is good. Square has really good growth, and not, its profitability isn't great. It's okay. And then Cisco's kind of the reverse. It has really good profitability and so year over year growth. Now Cisco also pays a nice premium, but I don't believe it's way overpriced right now. I believe it's right at $50. I mean, we can actually look to see what it is. So yeah, Cisco's right at 50. I mean, you look at 10 years and it really hasn't moved much. It's kind of gone up and down, and its current price isn't crazy. It's got a 14 PE profitability. It looks good. This is Seeking Alpha. This is what I really like to use for doing my fundamental research on a company. So that's Cisco. I've traded Cisco. For many years, I owned 400 shares. And I still do a lot of even iron condors, cash secured puts, even vertical put credit spreads on them. So eBay, I think, is a little pricey. I still like eBay. They now pay a dividend. AMD, Shopify, AppLovin app, and I currently have trades in all of these, and I own pretty much. I don't own any AMD, but I do own some Shopify, and I don't own any APP, but I'd like to. I've been selling puts on it for quite a while, and it's done well. MetLife is another one I like. It's not overly pricey, but it has a low PE. Mainly because it's earnings per share. So it's a little pricey. It's gone up a little bit today, but if you can pick it up around 70, you're doing pretty well with it. If you look max, it just, grows. It did have a dip back in, what was that, 28 to 2010. But it's been a good investment, and it pays a pretty good dividend. And it grows that dividend pretty well. So it's one of the companies I've done a lot of trades on. I also don't own it. CLS, I'm currently trading cash secured puts on it. I think it's Celestica. I think that's how you say that. But it trades in a small band. Its earnings per share, is pretty high, almost $4, and it's got a 13 PE. It has it has good profitability, not great. But it has fairly good growth. If you look at earnings year over year, it has pretty good year over year earnings, and they've beaten earnings all year. So it's one of those companies I like. Does it pay a dividend? I don't think it does. No, so it doesn't pay a dividend. But I've been selling options on it for a while and have done quite well. Oracle. Don't really need to say much about Oracle. Well-run company, crazy good profitability, almost like Apple's. It has gotten a bit pricey. At one time, I was trading it at 110, 115. This is NT NetApp that I did a trade on today, and like I said, it beat earnings, but it dropped. It also has really good profitability. I think its profitability its return on equity is over 80%. Yeah, so good profitability, pays an okay dividend, so it also pays a pretty good dividend. Palantir, I like Palantir. I think it's a good company. I just think it's overbought. I think it's too pricey right now, and it has the potential of falling back significantly. If it ever went down to like a 20 or 30 PE, it could drop a huge amount. Let's look at it, PLTR. So here they have a 13, just shy of a 14 PE. Let's look at Palantir. And here you can see an 86 PE, which is, it's 30.93. If it was valued similar to Celestica, it would be what, a third to a fourth of the price. It would be like 15 to 20. So I do think it's gotten a little bit ahead of itself, but it does have good profitability. Good return on equity, not great, but good, and it has fairly good growth. Like you can see here, the growth is pretty good. And then earnings, you can see they have pretty good earnings, 28, 17, 20, 23. Now, if you look at the other one I mentioned was Square, it also has really good earnings. It did slightly miss earnings, I think, recently, but it's growing at a nice clip too. You can see it's almost like a stairway. These used to be higher, so they've lowered their guidance already. And then UPS, like I said, I did a trade on them recently, so I think they're a fairly good price. I'm not recommending UPS currently. Johnson & Johnson, good price, but not great price, but a great company. Procter & Gamble, I've owned them for many, many years, going back probably 15 or 20 years. I've had really good returns with them, and they pay a steady, growing dividend, so good company. I forget who ODFL is. Let's look at it real quick. Oh yeah, Old Dominion Freight Line. So I've done trades with them. They've gotten a little bit pricey recently. Not crazy though. I like them probably closer to the 160, 170 level. They pay a little bit of a dividend. They've got pretty good profitability too. So for them, they're a bit pricey. They were up as high as 203, so they did come down. And Aflac, I'd really like to own some Aflac, but it's gotten really pricey too. So that's what I wanted to share with you guys. I provide this every week. I update it and share it with my membership. I'm an investor in probably almost every one of these companies. Like I also have some PayPal and Zoom. Zoom's recently recovered. It's back up over 70, so it struggled for the longest time. But Zoom, I probably have done more trades on Zoom than any other company. I probably have done 30 or 40 trades on them over the last couple of years. So this is what I wanted to share with you guys. Let me know any companies you really like that have worked out well for you. Please leave a comment. I typically try to get to them within 24 or 48 hours. And if you have any suggestions, something maybe a future video I should do. So as always, thanks for joining me and spending the time to watch the video. Look forward to seeing you next time.